so I can double check, see what we're doing with the stream. Lovely, brilliant. We are back in business. So sorry about that. Let's carry on from where we were. What we were talking about is how when we're back testing, we want to be able to choose the date and time that we want to back test. That was a question that came through on tradewithufos.com/Becky. Somebody posted a question there, which means I can expand on it. Now the question was, how do we know when to start our back testing? I was given the example of an investor. If you're an investor, then your trades are lasting a long time, weeks to months to years. So depending on how long you expect your trades to last, and therefore how many trades you might get into, depends on how much time you need to go back in. We ideally want a minimum of, absolute minimum of 30 trades, if not 100. I'm just double checking. It looks like people can see me, so that's good. We are back in business. Lovely. Hopefully this won't happen again today, so we'll be fine. So we want ideally 100 trades minimum. So let's say you're an investor and you trade 5 different products. And let's say on average you get into 1 trade per month and you want 100 trades. Well, that is 20 months that you would need in order to get 100 trades. Try and round that up. I would say always round that up. 20 months, round it up to 2 years. So let's say, for example, in this case, and this is assuming on the S&P, for example, let's say you're doing 2 years. Well, now is August 2021. You'd go back to August 2019, and that would be when you started your backtesting from. Now, this is good enough from here because it incorporates a market drop. From this point in time where we started, it incorporates the market drop, it incorporates the market going up. So it can show you what would happen across that period of time, or across the same period of time again, if the market were to go up, if the market were to go down, or perhaps if the market also was to go sideways. So ideally you want to try and incorporate those 3 market conditions in your backtesting. What happens if we're in an uptrend? For, let's say you do 6 months worth of backtesting, and for that entire 6 months, the market was in an uptrend. Well, then what you've proven is that trading strategy that you're backtesting, if it works or worked, that it works in an uptrend, not necessarily if market conditions change. So go back in time to cover the amount of data that you need to have. So minimum, in my opinion, 100 trades, absolute minimum 30. And try and make sure that you are incorporating when you're going back in time. Let's say for example, this crash here, let's say that happened here. Well, then maybe instead of going back 2 years, you might go back 3 years, just so you can test that bit too. So hopefully that makes sense. So that's with if you're an investor. Let's give an example if you are a day trader. Okay, so if you're using smaller time frames and therefore this doesn't apply. If you're a day trader, well, let's say you have a 60-minute on the left-hand side. So squish that up. Let's say you've got a 60-minute. Let's go back to our currencies there. So you've got 60-minute on the right-hand side. You might have an 8-minute, sorry, 60-minute on the left-hand side, 8-minute on the right-hand side. So that might be the type of trader you are. Now, if you're a day trader and you're using a 60-minute on the left-hand side and an 8-minute on the right-hand side, and you're day trading 5 hours a day every day, that's how you do it, then you might be in on just one product, 5 trades a day, 10 trades a day. Let's say you're in 5 trades a day on one product. Let's say you trade 5 different products. You might have 25 trades a day. Now that's a really high volume of day trading. So in fact, let's change the numbers on that. Let's say you're in 5 trades per day. If you're in 5 trades per day, then you only need 20 days worth to get 100 trades. So you would go back 20 days. So if we're on the 6th of August 2021, then you might want to go back to middle of July. I can't work that out in my head, but you might want to go back to the middle of July, or even round it up and go back to the start of July and get yourself roughly, that's just over a month, right? So about 20 trading days worth, more than 20 calendar days, of course. So you might go back to as early on as the 1st of July, 0 o'clock, right? 1st of July, 1 a.m. And that's where you start your back testing. Or of course, if you're trading between certain times of day, then you would only try and filter and look at the timings when you actually would be trading. So hopefully that helps you from two extremes there. If you're an investor and you're trading one product and you have one trade per month, you need to go back 100 months, which is going to be years, like 10 years-ish, 8 years, for you to get that data. If you're a day trader trading multiple products, you might only need to go back 1 month or 2 weeks to get the same amount of data. But make sure in either case that you are incorporating, this is a great example here. In this case, if we squidge this together so that we get about a month on the screen. So from here, we're looking at about a month. Let's squidge that up right till now and again try and make that point a little bit more. So if we squidge that even more, there we go. So we're looking at about a month all in one place. This is perfect because what this shows us is markets coming down, markets going up, markets going down, markets going up, markets not going anywhere, markets going down, markets going up, markets coming down, not going anywhere. So all three market conditions that you could possibly have, market going up, down or sideways, are covered within this period of time. So you can then prove whether or not your strategy works regardless of market condition. We can't control market condition, we can control how we react to it. So if you're back testing in an environment where you can see and you can practice in multiple different market conditions, you're going to be better armed for when you move forwards and you've got that moving forwards. So hopefully that makes sense. That was the first question that we had, which was where to choose to start backtesting. Now, incorporated in this is going to be time frame. So what we'll do, because I know we obviously got cut off with the free stream a little bit early, so I don't want to cut it off. I would have cut it off now to continue in the closed coaching session from now, but I feel bad that we got cut off there and that you would have missed obviously a few minutes. So what we'll do, I'll just explain about how you might incorporate different time frames into this. And I got a question about reactive time frames, so I'll talk a little bit about it. I'll then cut the stream, and then I'll continue in the closed coaching environment from there. Again, any questions, anything that people are watching that are going, that doesn't make sense, that does make sense, how would you do this, how would you do that? A question about something entirely different, you can of course do that. I'm here to help, here to explain things, here to make it easier for you. So let's say, for example, in this case of if you're back testing, you might come back here, this is on TradingView, and you might say, okay, I'm going to go back, and you just click replay. Let's say you've decided that you're going to go back a month. So let's do this, let's squidge this from here, and we'll do that there. All you need to do is click bar replay, click replay at the top, and you're going to go back to, let's say, the 1st of June. Let's say you trade from 10 AM, for example. You're going to go back there, and now everything you see on this chart is everything leading up to that point. In the same way, everything leading up to now is what you see on the chart if you weren't to use bar replay. So you're seeing it as if you've gone back in time to be trading that. So this is the candle that that begins 9 AM on the 1st of June 2021. So, oh, this was June. We wanted to do July. Well, let's assume June. Okay, so you've got a couple of months worth. You just do the same on the other one. So if I'm using an hourly chart on the left, I want to use an 8-minute chart on the right, or you might use maybe a 10-minute or a 15-minute, something like that. And you're going to just do the exact same here. So I'm going to scroll back in time on the right-hand side as well and go back to, I'd gone to the 1st of June, 9 AM. You'd do exactly the same thing on the right-hand side and go back to the 1st of June, roughly. Let's start in midday, so I guess that's when the market's open. There we go. At least in my time zone, which is summertime. So here we go. You're now going to be going, okay, I use an hourly chart for my bigger time frame. How many trades do I have in an hour? Well, that depends on the time frame you use on the right hand side and how many different markets you're looking at. In this case, for example, we had an upwards climate. Thick blue dot, upwards climate here. We had our EMA at 1.2230. I am looking at a different market. I've just realised that. Let's go back to, this is the Euro US dollar. We'll do this again. We'll come back in time and do that because we were looking at the Euro dollar on the left, but we were looking at the stock market, the US stock market on the right. So we'll do this again. We'll come back to June and again just try and make my point here. If you were using, because of course we give you time frames that you could be using in conjunction with each other, in the sense of you could be using a 1 hour chart on the left and we say use a 8-minute chart on the right. But what if you're using a 1 hour chart on the left and you decide to use a 10-minute chart on the right, or a 15-minute chart on the right, or a 20-minute chart on the right? In some way a smaller chart on the right hand side. So if you're doing that, let's start here just after 9 AM. There we go. If you're doing that, then if you're using bigger time frames, so if we use an 8-minute and you use a 20-minute, you will have less trades in the same amount of time as we would have, because we're using a smaller time frame. If we use an 8-minute chart and you use a 2-minute chart, you're going to have more trades than we would have in that same period of time. And again, not necessarily right or wrong, it depends on the style of trader you want to be. So if you're a really short-term intraday trader, then you might want to use smaller time frames. Even still, you might want to use a 30-minute on the left-hand side and a 2-minute on the right-hand side, or something like that. So the higher the time frame that you use, the less trades you have within that period of time. The more markets you use, the more trades you have within that period of time. And so you will know that, even if you've never traded that strategy before, you can work it out by saying, what I want to look at is, in this case, we're looking at currency pairs. I want to look at 10 currency pairs on day trading time frames. I've got the hour on my left hand side and I've got the 8-minute on my right hand side. Well, in that case, you're probably going to be having, if you're looking at 10 currencies every day and you're day trading using those time frames, you might have 10, 20 day trades every day. And so to get 100 worth is only 10 days or only 5 days. Perhaps go back a month, make sure that you've got it moving in that way. Now, in this case, we don't really have an example that proves the point, but let me see if we can play this out. We lost confirmation there. So at this point we had, so this was at 12 o'clock, so we'll move to the same on the right hand side, and you just play it out as if you would, as if it was real life, but you're not waiting as long as you would if it was real life. So at 12 o'clock we had a confirmed downwards climate. Here is going to be just after 12 o'clock, so 12:16. Let's see if we can find that. So we would have had a UFO that actually appeared and disappeared. Let's see if we can play this out to the end of the hour. See if we can make the point. We would have now gone into a new hour. So let's just try one more time on this side and we'll give ourselves another hour to try and see. If not, we'll draw it out and make the point. Okay, great. This actually works. Brilliant. So at this point we had a thick red dot, probability to the downside. We had our EMA at 1.2227, which is just inside here. Oh, it's just outside there actually. I'm going to assume, for the sake of argument, we're going to say these things lined up. So we now have everything lining up. Let's assume this red UFO came to about here, and we've got this area. We've now, in the space of a minute or two, we've now been able to see what would have happened over the space of 3-4 hours. And then we've learned from this, hey, we would have placed one trade because this trade would have worked out for us. This would have been a trade that we would take. So by doing that, you apply any strategy. In this case, I was using the strategy, of course, that we use. But you would apply any strategy to perhaps learn how many trades you could place within one day. Maybe do it over the course of a couple of days worth backtesting. Pick any date randomly to get that information. And let's say, for example, you pick a random date, you look at all 10, you do it over 2 days worth of backtesting, and you realize that you would have had 10 trades per day. Well, then you've got data that proves the point if you've never traded it before. If you have traded it before, then you'll have a general idea as to how many trades you would be having in that period of time, and therefore which date you need to go to in the past to start your backtesting to give you the time needed to get the data needed to prove your point. Okay, so what I'm going to do, I'm now going to stop the stream to the free places, so that will be like YouTube and Facebook and things like that. So I'll stop the stream there. I know we were a bit stop-start today, and that's perhaps annoying from your guys' perspective, so I'm sorry for that, apologies for that. However, if you do have any questions from what I've covered today, of course you can email me. You can email me becky@traddictiv.com. You can also go to tradewithufos.com/Becky and come here, get yourself a free Trade with UFOs membership if you don't already, and you can ask questions publicly so I can answer them publicly, or you can come and book one-on-one sessions with me as well if you'd like to. So hopefully for you guys that were following me, again, sorry that we got cut off, but hopefully this made sense. Hopefully that gives the answer to that question if you had it. If you have any other questions, by all means, please post them here so I can expand on them and give more sessions on those kind of things. I'm going to cut the stream. I will continue in the closed coaching community for those of you that are there, and we're going to talk about reactive timeframes. Alrighty, so let me switch this off. Give me a second just whilst we wait for these to come off. And we will continue.